Okay, all right. I think people are still coming into the webinar, but we're going to go ahead and get started. I want to welcome all of you to our program today on IRS criminal prosecution, I should say enforcement priorities. But before we get started, I just have a couple of housekeeping announcements. You'll receive your MCLE certificate shortly after the program. Your certificate will also be stored in BHBA+, our members only community. Please take a moment to complete the survey that is included with your certificate. This program will be available in a couple of days on BHBA On Demand, BHBA's newest member benefit presented by Lawyers Mutual Insurance Company. I want to thank our sponsors of the section, Hochman, Salkin, Tasher, and Perez. The Hochman, Salkin, Tasher, Perez PC Advantage is experience, an eye for innovation, and a genuine dedication to clients, their families, and their business. In addition to their national practice in civil tax and criminal tax controversies and related litigation in federal and state courts, the firm is also active and successful in handling non-tax matters such as business and estate planning for high net worth individuals and closely held businesses, together with white-collar defense and commercial disputes. And so now we will go on to our program. So I'm going to be moderating today's program. I'm Michele Weiss. I am a principal at Holtz, Slavett, and Drabkin, and I focus my practice on tax controversy matters. I'm also chair of the section, and I want to welcome our speakers today, Wilfred Castro and Victor Song. It's really a treat to have them present today. Victor is a former, has over 30 years in federal law enforcement with the IRS. He was a former chief criminal investigation headquartered in Washington, D.C., and amongst his duties, Victor oversaw a worldwide staff of 4,200 criminal investigation employees. They investigated and assisted with prosecution and criminal tax, money laundering, and narcotics-related financial crimes. He worked on tax evasion matters, and he also worked extensively with international law enforcement for that throughout the world. And he was responsible for the simultaneous criminal investigation program agreements with Korea, Japan, Spain, and other countries. And his accomplishments go on. So it's a treat to hear from him. And also Wilfred Castro brings 22 years of global federal law enforcement experience from the U.S. Department of Treasury, plus leadership in fraud detection at City National Bank, a subsidiary of the Royal Bank of Canada. Throughout his career with CI, Wilfred demonstrated excellence in his role conducting and supervising investigations involving tax fraud, investment fraud, bank and mortgage fraud, recycling fraud, public corruption, identity theft, cyber fraud, anti-terrorist financing, domestic and international money laundering, narcotics, this is quite a mouthful, and white-collar related money laundering. And he also worked on OFAC, which is the Office of Foreign Asset Control, that deals with people who have, and prosecuting individuals using the racketeer RICO statute. Anyway, their list of experience goes on and on. So really looking forward to their program today. They're going to be covering 5 areas. They're going to focus in on priorities this year for the IRS on tax fraud, cryptocurrency, money laundering investigations, general fraud, counterterrorism, and terrorist financing. And what they've asked is if you have questions, please put them in the Q&A and they'll answer the questions as they go along. I'm going to help them with answering people's questions. And with this, take it away and let's get started with our program.
Thank you, Michele.
Thank you. Hello, everyone. Thank you for having us. I'm going to share my screen here and we'll get started. So as you guys know, I don't know if you do know, the IRS has a civil division and a criminal division, and both Victor and I were part of the criminal division. And these are the priorities that they have for this fiscal year. And I'll let Victor talk a little bit about it since he was a former chief of the IRS. I'll let him talk about how they actually get to these priorities. As a supervisor with the IRS, we were just told these were our priorities. But but before we get into that, I just kind of want to show everybody what IRS CI criminal investigation actually does investigate. And it's kind of, this is a majority of the items that we look at. There are some other items that just kind of, as they arise, we sort of look at them. But for the most thing, tax is, as our current chief likes to say, is our bread and butter. But we do other things as well. And a lot of people are actually quite surprised when they hear about all these different items. So I said, this is a majority of the things that we investigate. Let me move. So the priorities for fiscal year 2023 is tax fraud, which we broke it down to international, general, and abusive tax schemes. Cryptocurrency, which has been huge for the IRS starting with last year, and we think it's actually going to grow even more this year. Then you have your money laundering investigations, the white collar ones and the narcotic ones. General fraud, which includes corporate fraud, and a couple other items which we're going to touch upon, which includes, as COVID fraud and medical fraud and things like that. And finally, we have counterterrorism, which obviously is something that is probably going to be a priority from years to come. I think that's probably one of the ones that's always going to be there, and I think it's a necessity. Victor, if you can kind of tell everyone how we actually get to the priorities and how they're chosen.
Usually, IRS looks at things strategically 6 years out. So they'll have a 6-year plan, and that's updated every year, and it goes out for 6 years. And then annually, we get together and kind of look at what are the anomalies that we see on the horizon for this year. You can see where cryptocurrency is on the list for this year, but you can see that there were investigations in the last few years, but it's really starting to hit hot and heavy now. So each year you'll look at where are we seeing some of the areas of non-compliance or areas of investigative resources that need to be committed. And so that year is where we're going to start. They will start putting a lot of their emphasis into that. And they're already, will this summer start looking at emphasis for FY24. But these 5 areas are what they're going to be focusing in on this particular year. And again, each summer they'll start looking at areas of non-compliance. You can see what's hitting the papers now. You see QRP and return prepare fraud. There's going to be PPP loan fraud, and that's stuff that they've looked at through data analysis last year. So this year is where they're going to start committing a lot of the resources to that area. We'll cover that a little bit down the road, but that's generally how they look at planning for an annual plan, and at how that fits into a 6-year strategic plan.
Okay, thank you. So the next slide we're going to look at here, this is directly from IRS CI's 2022 annual report that they put out every year. I just kind of want to give everybody kind of an idea of the type of cases that they look at, the sources. We'll talk a little bit about staffing, because I remember when I was an agent, it was probably at one of its peaks, and then it's dropped considerably once it was a large group that actually retired at around the same time, and now they're obviously trying to restaff. And I'm sure everybody knows that there's a big push now to hire people, and the IRS did receive funds. But just sort of looking at it, you could sort of see that the conviction rate on IRS CI cases is 90%, which is actually really, really good. There was 1,800 cases referred for prosecution, 1,500 convictions. Going into the tax fraud that's been identified as 5.7 billion. Looking at this chart here, you have how we spend our direct investigative time. As you can see, 71.7% of the time is actually spent on tax cases. And that includes all these items here. You have your narcotics time, which is 11.6%, and your non-tax, which would be your general fraud. And then here is all the sources that we get. You can see most of our cases come from the U.S. Attorney's Office and other federal agencies. We tend to work a lot with a lot of the federal agencies, whether we're on task force or whether we just sort of work together. Like, for example, when I was an agent, I worked a lot with the DEA. So DEA would do the narcotics portion, and as the IRS agent, I would do the money laundering portion, and it was a good team. But you can see we also get it from, there's cases that we get from FinCEN, which we'll talk about later. There's our IRS Civil Division. There's the public, which actually you'd be surprised. We do have a whistleblower program, and many of the IRS offices just take walk-ins. There was a time as an agent that people would just come in just to talk, whether it was an ex-husband or an ex-wife who would come in, would have some information that they'd want to share, or just somebody who felt that they were wronged.
Well, can you go back to that prior?
Sure.
When you look at direct investigative time spent, where Will had talked about the current chief talking about the bread and butter cases are tax cases. You see that tax time, direct investigative time is 71.7. Usually you want to try and keep that above 70%, because that is where our budget, when we talk to members on the Hill of where we're going to be getting our budget, where we're going to be spending our time, predominantly it's going to be in the tax area. You look at narcotics, it's at 11.6. Usually you try and keep that time where you're getting reimbursed through OCDF or other, through HIDA or other budget means. You don't want to go too far over, because then we're not getting reimbursed for the time. So what that tells me is, for this 22-year snapshot, they're getting reimbursed between 11-12% of their direct investigative time. That's how much money was coming in that supplements the CI budget. So that's where they want to keep their time spent. So that 71.7 for direct investigative time for tax, that hasn't changed much for probably 20 years. And that's where you want to keep your time spent on is tax. When you look at some of the other investigative sources, predominantly the cases are going to be coming from U.S. Attorney's Office and other federal agencies. When you look at crimes committed, if it involves money, that's where the other agencies and U.S. Attorney's Office is going to call back to IRS CI to get involved, because IRS is the only federal agency that can investigate any kind of source of crime as long as it involves a financial nexus. And most every crime is going to have some money nexus to it. So that's why they'll bring in CI agents to supplement, whether, like Will said, working with DEA, working with FBI, HSI on customs enforcement. That's where IRS's expertise comes into play.
I'm just wondering, Victor, if you have a case, for example, an activity that can fall into multiple categories. So for example, it's a narcotics crime, but it also involves not reporting income. How does it get categorized? Is there a priority, or is it both, or how do you go about it for this purpose?
It'll probably get coded as a narcotics investigation. In the old days, when I was an agent, we would work the tax part of it. And nowadays, usually it'll just stay as probably a narcotics money laundering case. If it goes back and forth and there is a tax charge, usually they don't work that tax charge so much anymore, because the time that you're going to be getting, the U.S. Attorney's Office is going to pursue the money laundering charge, the narcotics violation. And when they do that, IRS will work the money laundering side of it. They get the credit for the money laundering side. DEA gets the narcotic seizure. And if there's any asset forfeiture, the agencies will share that. Will, do you have any more on that?
Yeah, I think from the perspective that I used to do as an agent, I think the U.S. Attorney's Office takes the approach that that the jail time would be much higher for a narcotics case than it would with a tax case. So I think that's usually what it would come down to. I know now in dealing with some of the items that we have dealt with, some of the current districts actually require, like if you're going to do a narcotics charge, that you actually also involve a tax charge, which is something that never happened with us. But I think from that perspective, it really gives someone a little bit of leverage in a plea agreement situation where, you know, maybe you say, okay, you know, we'll plead to that tax charge as opposed to
I
pleading
see
to
that on
a money
in my
laundering
practice.
charge.
Mhm.
Yeah, when I was an
So, I
agent
think-
way back when, that's what we did was the narcotics money laundering part. We would add on either tax evasion or false tax return charge. And that way they could plea bargain down.
Yeah. Right. Okay. All right. Thank you.
Okay, heading into the priorities. First one here is tax fraud. And so the IRS has different programs that they have. One is the questionable refund program, which here is filing multiple returns with fraudulent claims for refunds. You have your non-filers, which are people who have never filed a tax return. And you have something that we known as SIRF, the stolen identity refund fraud, which is basically people filing early, filing often with your information. And, you know, that's why the IRS and, you know, kind of gets it out around this time that, you know, you should really be try to file your tax returns as early as possible, because you don't want to file your tax return and find out, well, Mr. Castro, you've already filed your tax return. Then you have a whole nother issue with trying to prove that you're the correct Mr. Castro that filed your tax return. But obviously with the accessibility of everyone's information out there, these fraudsters know that now's a good time, and they try to get in as early as possible. We also have the RPP program, which is the Return Prepare program, which involves preparing false tax returns for you. Usually these people, if you go prepare your tax return with them, they'll be the ones that would guarantee you a refund, or would say, okay, I can get you this refund, but you may have to, you know, like, but I get to get 10% or 20% or something like that. And then the last item would be the employment tax. And I know Michele and Victor and I were talking earlier about this is kind of something that used to be, you know, that a person would do at their company if the company was in financial straits. You know, it'd be a way like, okay, we need to keep these doors open, so maybe we're not going to file and pay these withholdings. But now the IRS is kind of looking at all of it as a whole. So it's I don't think they're separating whether you just did it to keep the doors open, or you just did it just because you didn't feel like paying, or you used the money to take nice vacations or anything like that. I think there really is, I think in the last year, I follow all the DOJ press releases, and I've noticed in the last year probably a large increase in employment tax cases.
That's a big area for CI. It's usually millions of dollars. You get great press out of it. You usually get good jail time out of it. So that's an area that they really do try and emphasize. And you know, Will's right. We are seeing a bunch more where it's not just them taking the money and buying the boats and the houses and going on the trips and buying jewelry. Their IRS and DOJ is looking at all of them now. And we're working with a bunch of clients with defense attorneys, and we're surprised really to see that so many of these cases that are coming up are ones that aren't ones where they're just buying a lot of assets. They're trying to keep the business afloat, but CI is taking a hard, and DOJ is taking a hard look at it. The Return Prepare program is another big program that's hitting pretty hot and heavy now. You're starting to see a lot of media attention, a lot of press releases going out on people being sentenced or indicted in this area. That's not by accident. That's very much planned to get that out during the tax filing season. And you know, during this filing season, a lot of folks don't know that CI has an undercover program, shopping program to shop some return preparers that have come up on their radar, looking at they're issuing a high percentage of refunds or a high percentage of refunds claiming certain claims that look fraudulent. So they will send out shoppers to get returns prepared and see if it was prepared correctly or not correctly. And if they're not, then that gets farmed out to the field offices and they'll work those cases.
Yeah, and I'd just like to add with the questionable refund program and the SURF and the RPP, those are usually certain groups within the IRS that's basically like someone, like there'd be a group of agents that just strictly work those programs. So you'd have somebody who'd be in charge of it, and there'd be a bunch of agents working those type of programs. And I think, and it's big during tax time, but IRS agents look at those cases all year long. They don't just stop with the, with the tax time. So it's an ongoing look at all these programs each year.
Yeah, that SURF program it's amazing how fast the crooks will find deceased people. In a matter of days, they'll get the information and start filing returns under that person's personal information.
We have a question here. Victor or Will, are you seeing employment tax fraud cases with misuse of SBA type loans?
Go ahead.
Yes. Yeah. That's and I think that's something that we're talking about later, but yes, we do. We are seeing that. And I think that's, I mean, obviously with the SBA program itself, there was a lot of fraud attached to that. But I actually think that the PPPs actually kind of spurred that employment tax increase. I think that's what kind of spurred them saying, hey, you know what, we should start looking at these, because they began to realize that, all these people had all these businesses, allegedly, and they were saying, how come we weren't getting our share of this?
Yeah, as soon as the loan started going out, a lot of us in the profession started talking. It's like, where's the oversight, right? And this is like it's a program that's ripe for fraud. So if we're looking at on the outside saying that, you can dollars to donuts, CI is taking a hard look and was going to start looking at that pretty quick, which they have.
Right. And I think, part of your PPP loan, you're supposed to submit your 941s, which would show all the money that you withheld and paid back. And I think when they started comparing those to probably what they actually had, they realized that it's quite a deficit in what's being sent to the banks for the PPP loans and what the government is actually getting. Moving on to international, I think one of the big things are
sorry, I was muted. One second. There's another employment tax related question from Mitch Miller.
Okay.
I worked on a bankruptcy case which involves hundreds of millions of dollars of stolen payroll taxes, which was obvious from the start. It took 5 years before criminal indictments were brought. Why so long?
It takes time.
Well,
That's the biggest,
yeah.
By the time they get that information, it just takes a lot of time. And especially on the larger cases, to go through the financial information, getting it from the businesses or the financial institutions, it takes, sometimes the banks don't cooperate quickly, and you get the information slowly, but when you do, then the whole financial analysis has to take place. And it's not just the analysis of the bank records, the financial records. It is, are you going to do search warrants? Are you going to, is it a grand jury case? Are you going to bring people before the grand jury, or are the agents going to have to interview tons of witnesses to put the case together? So a lot of it is, it's time and labor intensive.
Yeah, I was going to say the government doesn't move fast. but it does move. You know, and like Victor was saying, there could be a number of issues why, you know, there could have been, you know, something at the U.S. Attorney's Office that sort of slowed it down. There could have been a variety of issues. But yeah, it's those investigations are very time consuming, and it really takes a special type of IRS agent to kind of go through that. You know, everyone, especially one that's labor and record intensive.
In some of these bankruptcy cases, they establish asset protection plans. They have things that are offshore, and to get the records from governments outside of the U.S., it takes a lot of time where we have to do a lot of mutual agreement, a lot of MLATs, and working through the embassies to get these records. There are agents that are assigned to embassies across around the world, and you know, CI will use their agents out there to help get those records and do those interviews. But sometimes it does take some time to get that done.
Which is an excellent segue into this next slide here of the Joint Chiefs of Global Tax Enforcement, otherwise known as the J5, which is something that's been recently started. And our current chief is kind of been working on this and spearheading this. And as you can see, the main goal here is to increase the enforcement collaborations, to gather information and to share this intelligence, stuff that you would normally have to do an MLAT to actually get. I think they're working on these agreements when they can openly share this information. Currently, it includes the Australian Tax Office, the Canadian Revenue Agency, the Fiscal Information and Investigative Service from the Netherlands, and HMRC from the UK and the IRS. So they're really trying to work together to sort of combat these investigations. And I think this has also probably been spearheaded by the cryptocurrency and the cybercrime investigations. But things, I think across the board, I did spend some time in London as the attaché for a short time, and I think it was really hard to get the information from some of these other countries. So I think this is going to be a great tool for all these countries in being able to openly share some information that would normally be, it would be very long time to actually get this information. And a lot of it wouldn't have the complete information, I guess would be a way to kind of sugarcoat that. But I think with this, I think it's a great step. And I think it's going to lead to a lot more international cases for the IRS.
That's a good point. When I was my last couple of years as a chief there in CI, we embedded some resources in Europe, one at the OECD, one at Europol. And that was just to get the ball rolling, because we, you know, at that time we were working all those Swiss bank cases, and then we had started the voluntary disclosure program, and all that was bringing in records and bringing in information that we knew that was going to feed into investigations down the road. But part of that OECD, they have a, you know, we see the G7, the G20 conferences, they have a working group, the Financial Action Task Force, the FATF, and CI was a member of that task force with 32 other countries. With that, they were looking at what are the countries that really we can work together and get records quickly. So when Will showed that group of the J5, those are 5 countries that can work together and get records and share that information very easily, very quickly. So that group was put together probably in 16, 17, Will. And that group has now taken that, and they have some sub-working groups to work some of these large transnational, multinational investigations. And I think some of those things are starting to come forward to fruition now. And I think that's just going to get bigger and bigger.
Okay, moving on, we have the abusive tax schemes, which IRS is going to be investigating the promoter and the clients. And that's international and domestic. And, you know, obviously the way these groups operate, they create these trusts and these foreign corporations and the partnership. And really it's all done to conceal the true ownership of the assets or the income. And they usually have a foreign entity as the owner, which is going to hide the true U.S. taxpayer ownership. So I think that's and this is, again, something that the IRS has been looking at for a long time. But I think with some of these things with, you know, the J5 and things like that, it's kind of opening it up where we can sort of get a lot of this information more readily.
I think for us, we're helping clients with attorneys, especially like in family law, we see that some of the folks, the spouse will take money and assets and move it offshore so the other spouse can't get to it, and they'll create a variety of different trusts and that has different beneficial owners that are offshore. So it's just hard to track. And so sometimes we get brought in to try and track that down, and it's really just not easy. And I think CI sees the same thing, that there's a lot of money that's stored offshore, and they're looking, how do we get that either brought back, or how do we get a little bit more transparent on how we find out, CI finds out more on how that money gets taxed accordingly.
So the next item is cryptocurrency. Like I said, I think the IRS took a major leap in the last few years with being able to trace and find these assets. And now it seems like this is kind of a hot topic button, and I think the other law enforcement agencies are beginning to see CI's worth. As you can see, they're now being added on to like the SEC's crypto assets and cyber unit. DOJ has a cyber digital task force, and the FBI has a national cryptocurrency enforcement team. It is really all relying upon, you know, all these groups coming together, and that includes the IRS, because the IRS, I think, has done a great job in tracing these assets. I know that, in the past year, I think one of the cases that the IRS annual report highlighted was the case of the Hydra that were they found on the dark web. And
Silk Road.
it's also it's also taking shape in the 1040s now that are being filed. So this is the question that was asked on your 2021 tax return, and they sort of moved it here at the top, and they just basically had just a general question where you would, you know, answer yes or no. And I think in 2022, you can see that it's still in the same place, but it's now, you got your highlight of your digital assets. It's asking you a little more information. You know, did you receive as an award or payment? They're sort of defining what they're sort of looking for. And they really want that question answered. Obviously, they put it so high. I mean, they put it above your own dependents. So, you know, they want you to ask this question of digital assets before they even ask you your children's names and socials. So as you can see, they're only asking if you've received or disposed of any digital assets. Obviously, if you purchase any, I think the answer would be no. It's only if you received as an award or something like that, because currently, I think digital assets are treated more like a property and not as money, and it's taxed like a stock. So, some of these exchanges might send you like a 1099 miscellaneous or a 1099B, but I think this question is really huge if a client of anybody's, it's really gonna, the IRS will use this if you mark a yes or a no. And if they find it and you've answered in the opposite, I think you're going to see that that will definitely be sort of something that's used against you. One, because you're signing, obviously you sign the tax return at the end as a, under penalty of perjury. And even as a preparer, or even if you have a client where, this is something that people should ask, because I think it's just kind of sitting right there. And I think the IRS is really sort of promoting, like, we really want you to ask this question, and we really want the people to answer it.
Yeah, good point. That you'll see down the road next year, or the year after, seeing what cases are brought and what, as far as signing a false return, 72061 charges, and because they check the box. It's like the Schedule B on before, where you're not checking the box of having a foreign account, is that they're bringing those cases forward now.
Right. And if you do need more guidance, if you look at the instructions for the 1040, they do sort of give a couple of examples, as this would be yes, this will be no. And the IRS also has a cryptocurrency FAQ, which also goes into a little more detail. Money laundering investigations. We obviously have, there's your white collar side, and then the narcotics trafficking side. I'll let Victor talk more about the white collar. My expertise would probably be more in the narcotics trafficking.
Yeah, on the white collar side, you can see there where it's mortgage fraud, mail, wire fraud, embezzlement, bribery. In this area, we have a lot more clients that are allegedly involved in this area, that we're working with defense attorneys to see how we can either get them out of that, where the charges are dropped, or a lot of times where CI will, or another agency will go and seize assets, whether it's financial accounts or cars or homes. And sometimes the government, in our mind, tends to overreach and tries to take everything that's connected to that taxpayer or client. So some of the things are, okay, if they are guilty, maybe there's a way that we can kind of look at mitigating some of the assets and some of the seizures, so it's not quite as onerous or painful to the client. But it's a big area that CI works on. When you look at the types of frauds, anybody that is using the financial institution to move money around, you'll have wire fraud as a built-in nexus to the money laundering charge, and it's very easy for them to prove it through the bank records. It's very easy then to start putting seizure affidavits together to start seizing some of the assets, homes, financial accounts, cars, boats, whatever it is, jewelry. They'll start tracking all that. If it's tied to that fraud, they'll go in and try and snatch all of that. And of course, narcotics trafficking is what you usually think of money laundering, but a big chunk of what CI does is in the white collar arena. But we'll talk about narcotics.
Yeah, the narcotics area is actually is just a small piece, and as we had said earlier, as Victor had said earlier, it's because that money, that the time that we put into those cases actually gets reimbursed through us. And especially through this one, the Organized Crime Drug Enforcement Task Forces, which is known as OCDF. Currently there are, and they're situated throughout the country, there are currently 19 OCDFs, also known as strike forces throughout the US. And the OCDF's goal is to combat the higher level drug trafficking organizations. When you see the Chapos and everybody getting arrested, it's usually done through an OCDF task force, or even something such as the fentanyl and the opioid crisis. That would be something that would be a high priority that's done by the OCDF. And of that, I believe, of those 19, the last one was the number 19th was the one that was started in Los Angeles in about 2017, I believe, is when it was started. The other area is the high intensity drug trafficking area, also known as HIDA. That there are 33 HIDAs, and HIDA is more of a state and local working with the federal agencies, working on, similar to the OCDF, maybe not such a high priority target, but when I was at HIDA, we did a lot of gangs. That was probably most of the work that I did at HIDA was doing the gangs. And of course, my part was doing the money laundering, because really with any drug organization, you know, they don't do it. It's not like a bucket list type of thing. It's always for money. And there's always, somebody has to be there to trace that money. And that was usually us. But you know, both of these groups are usually made up of every organization, every sort of alphabet that you can think of. There's probably one in all of these. So moving on to general fraud, we have your corporate fraud. And I had found this article that said, based on a recent study, it's estimated that 41% of publicly traded companies misrepresent their financial reports. And of that, only a third of that fraud is detected. It's kind of a 41% is kind of a large number for me. I was kind of a little taken aback by that. Not shocked, but just taken aback, I guess you can say. But obviously, the IRS is realized that also. The second one, that's COVID-19 related. I know all the money has gone out and everyone thinks it's sort of over, but the government actually, one, they just extended the statute of limitations from 5 years to 10 years. And they're trying to do that for the unemployment EDD fraud that also happened. But they're also, I just read an article recently where they are putting money to develop strike forces that's going to go after this, going to go after all these people. I mean, it's the money that had gone out is just astounding. I saw a lot of it when I worked at a bank. After I retired, I worked at a bank, and one of the things that I did as an investigator at the bank was looking at clients who were involved in any wrongdoing. And I saw a lot of these PPPs and EIDLs and every one of those type of alphabet loans going out and being used for like all the things that you see on the news. So it's still out there, and I think it's actually going to be something that is going to be looked at more, and I think it's going to be looked at in addition to. So let's say you have somebody like we were talking about, maybe a money laundering and tax investigation. I will tell you right now, I will guarantee that some agent is looking to see if that target also received the PPP. And if they did, they're definitely going to use that information against them. So it's just something to sort of think about. And I think I have it on a later slide where I sort of address these other type of cases that are coming out that sort of piggyback on the original investigation. Then we have your healthcare fraud, which is everything from false billings to medical equipment fraud. You have your staged accidents, your kickback schemes. You know, a lot of times the DEA and the IRS work together on some of these cases regarding, you know, these pharmacists who are basically
False prescription schemes.
Just kind of selling them out the back door. They kind of track all that, and I think for the IRS, it's somewhat easy to trace the funds. There's not a lot of hiding going on with what these people do with the monies. And then last, you have your fraud against your financial institutions, which is really, you know, any sort of loan fraud and things like that. You can almost kind of put that PPP stuff kind of in the fraud against the financial institutions. But then as it states here, the currency transaction reports and the suspicious activity reports, they continue to be an effective investigative tool. And I will definitely talk about that, because working on both sides, working at a bank and then working for the government, it's amazing how those reports that the banks put out is so crucial and important to IRS cases.
Getting back to that COVID fraud, that's really on the early side of things. I mean, it wasn't, again, by accident that they extended the statute for those. That gives the government a little bit more time to start investigating that. When you look at going back probably to 2008, 2009, when you saw those mortgage frauds where the banks were collapsing. And so those mortgage fraud cases are still being worked now, today. And that the agency that's SIGTARP, which is looking at those types of cases, they're still involved with those. They're winding down, but you can see how long it takes for them to go through the number of cases and investigations for them to go through that. On these COVID type loans, loan fraud, it's a much larger scale. So it's going to take time for IRS, and they'll probably get another Inspector General agency put together to start target or task force to look at this. But that's going to take a good 10 more years. You'll see this in the news periodically, I guarantee, for the next 10 years.
Yes, true.
I just wanted to give you your 10-minute, we're almost, it's 1:18, so just giving you a little heads up.
Okay, thank you. Counterterrorism, terrorist financing. There's not much to say, or much we can say, let's say that. But I did have an agent that worked in these task force, and I just have to say, like, anything that came across their desk is something that they have to look at. No matter how far-fetched it may sound, it's something that they always have to look at. And because you never know, it could be that one thing you didn't look at, and that's what causes something. But a lot of times, again, going back to what the banks are doing, is when they file a SAR and it has an OFAC sanction, whether it's a wire that came from China or Russia or somewhere like that. I can tell you that these groups are definitely looking at those SARs as they come in for this information. So they are, they're not only just, reacting to what somebody's doing, they're actually being proactive and looking at these SARs and trying to find whether they're data mining the information or anything like that. But it's something, like I said, I don't think is ever going to go away.
Right.
Before you go on, we have a question from Chuck Reddick. So, and it says, for those of you who may have not handled many criminal tax investigations, can you explain how you guys work with the taxpayer's representative, such as a lawyer or accountant, during a sensitive civil examination, a criminal investigation, and a criminal tax prosecution? When should a lawyer consider consulting with you?
Well, as soon as possible. One of the great question is, a lot of attorneys, they may or may not have a lot of experience working tax cases, but on these types of cases, our group has worked both sides, right? We were agents for 25, 30 years, and now are working with the tax defense counsel. And what we bring there is to show the client and the attorney on what the agency is going to look for. I mean, we know how we would investigate that case, and we know exactly how they're going to do it. So we can give that kind of ins. But on the other side now is, what are some of the weaknesses? We know where some of the chinks in the armor is, you could say, is where are some of the good defense areas that we could try and exploit. So working with defense counsel is imperative to get folks such as our company involved early, because it does take time to go through. Sometimes go through a lot of the financial records to analyze. There are times that, you know, we've been working on cases 3-4 years because it's taken that long to go through each and every dollar and locate and track where that money came in or where the disbursements went out to. So not only do we know where the strengths and weaknesses of that case, we're able to work very closely with the defense team and show them exactly where the strength of the IRS cases and where the weaknesses are.
Right. And actually, you know, piggybacking on that, it's also, look, we'll also be the first to tell you if, you know, the IRS has a great case. I mean, you know, IRS CI does great work, and we'll be the first to tell you, like, yeah, this, like, your client should try to get a deal as soon as possible, because this is pretty much an airtight case. So I think it works sort of both ways, where, you know, we do know, you know, any sort of weaknesses that could be on, but we're also going to be completely honest and let you know if it's something that, you know, if we can save everybody time, you know, and just say, wow, it's a really good case. And, you know, your client has done basically textbook money laundering, and, you know, it's going to be hard to overcome any of these issues. Moving on, I know some people wonder, and we showed the chart earlier, how does IRS CI get cases? Well, we have some from the BSA. We get the information from other agencies, as you could see, and from the U.S. Attorney's Office. That was probably a majority of our cases. We get cases from the IRS Civil Division. We do have a whistleblower program, and once they take the information, they send it out. If the information, they will send it out to the appropriate office of the IRS. And then we have people who just kind of walk in and just kind of say they have something that they have to get off their chest, and we're always willing to listen.
And, you know, throw back to when Chuck was the commissioner, he brought Eric Hilton, who was a CI deputy chief, and brought him to run a portion of the civil division, the SB side of things. And that really helped where Eric knew both sides, on the criminal side and civil side, to work together. So a lot more cohesiveness would take place. And as far as civil division, working their fraud referrals and getting them over to CI, I think you'll see a lot of that, the fruit of that labor hitting now and in the years to come. And we're, you know, when we look back, when I was an agent, when Will was an agent, you know, we got a lot of fraud referrals from the exams the audits that exam was doing, and that kind of went down a little. But I think when there was a lot more emphasis to get that ramped up again, you're going to see where a lot more, the percentage of cases that CI is getting, you'll see more from the civil division. And also where you look at where IRS is data mining and really hiring data analysts to go through all the information that's coming into the service, and where they can actually mine that and parse that out to the different divisions, whether it's an exam or CI, to start working those cases. The data analytics that IRS is doing, and although we don't have line of sight into it, I know parts of the information that they're getting, the types of information they're getting, there's going to be a lot of cases that's going to be generated from the data analytics. And that's really something that was pushed very hard by Mr. Reddick when he was the commissioner there, and that got up and running. And although you're starting to see that now, and Chuck's not the commissioner anymore, you're going to see that really take off and really start hitting in the years to come. And that's definitely part of their strategic plan, is to start getting cases from those analytics and really focusing and working better with less resources, because even though they're getting money to get resources into the IRS, it's really barely keeping them above the retirement of employees that are walking out the door. So even though you hear the 88,000, 87,000, but that's over a 10-year period, that's really basically keeping you afloat. It's really not growing the agency that much. So they have to work smarter, and that's where they're going to be getting their cases from.
Okay, we have another question from JB Rizzo, who's a forensic CPA who works solely in marital dissolution cases. And he asked, at what level of tax fraud draws the attention of IRS CI? Tens of thousands a year, hundreds of thousands a year, millions a year, hundreds of millions a year? Not clear what the question is, but maybe you can just run with it.
Yes, is the best answer.
Yes, all of it.
They're going to look at everything. I mean, just because the dollars may not be high, it may be, they're going to take a look at everything that's a part of that case. So there are cases that are smaller in dollar, but hey, there's a bigger media impact there. There's a deterrent effect there. They're going to want to hit areas of non-compliance, whether it's small dollars or large dollars.
Yeah.
Okay, and we're just about at the hour. So, and I know you still have a couple more topics, but I'm just wondering if you could maybe, just sum up in the next couple minutes, any final points that you'd like to make.
Sure. So this was just the chart that the IRS recently put out of the information of how they use all the reports that are filed with FinCEN. And I think the main point here is that of all the investigations that were opened up in 2022, 84.2 of them had a BSA filing related to the primary subject. That's huge. There's a lot of bank information, and usually if there's an IRS criminal investigation, they probably had a SAR filed against them. This number here, IRS cases that were searched against the BSA data in 2022, 90.4. For me, it was always 100%. Every case I looked at the BSA data. And then in closing, we had these are sort of the hot topics that we talked about the criminal prosecution. You have the additional charges that we were talking about. For example, if your client is being looked at for a tax charge or a money laundering charge or any of the things that we talked about, just be aware, if they, you may want to ask them if they were involved, if they received a PPP, because I can tell you those are the type of things that would be the additional charge that they'd sort of come after. They'd sort of add that charge in, because they know more than likely if somebody's already being looked at and being investigated, they probably might have applied for a PPP in some way. We have the plea agreements. There's this recent ABA plea agreement task force report that came out that said 90% of criminal cases in federal court ends with a plea bargain. It's just something that you should kind of be aware of. I think it almost shows that going to trial is a rarity. And I think this plea bargain task force report kind of showed that maybe there are some people who are just kind of being almost like the plea agreement is not really a plea agreement. It doesn't really give anything away. And the people who are getting these plea agreements are sort of just saying, look, I just want this thing to all go away. Just because the word plea agreement is in there, they think they're getting some sort of deal, but they're actually not. I think some of the plea agreements that we've seen recently, we basically ask our client, like, where's the deal? Like if it's a plea agreement, you're agreeing to sort of plead guilty, and there's got to be a little something that you get back in return for sort of doing that. And a lot of them we're seeing that there really isn't. And we think maybe a lot of times people might be kind of just feel the pressure of everything and just go ahead with the plea agreement. The other thing, the IRS civil ramifications of cases, just because you have a criminal case doesn't mean that they won't refer any sort of tax case for the civil ramifications. You have your tax and money laundering case like we talked about before, and the asset forfeiture. I think a lot of times you may see a tax and money laundering case because the asset forfeiture is involved. Asset forfeiture provisions apply to a money laundering case, but they don't apply to a tax case. So if there's assets that the government wants to recoup in any way, you might see a tax and money laundering case, and that way they can include the asset forfeiture. And then finally, we have these recent FBAR, the reports where the Supreme Court ruled in favor of the taxpayer.
And you know, stay tuned, right? I mean, that they did make a ruling there, but that doesn't mean that the law is not going to be rewritten in a more definitive manner. So that may be down the road.
Yeah, and that involved a non-willful penalty also, so
Yes.
not willful, so it wouldn't have been something criminal, but it is interesting to see where the Supreme Court is heading with this. Anyway, I just want to thank both of you for the program today. It was really very insightful, really appreciate it. So great to hear, you know, the inside scoop on these issues. If anyone has more questions, of course, feel free to reach out to Will or Victor. If you're interested in getting more involved in the section, please come to our monthly meetings. We meet on the third Thursday of every month at 8:30 a.m. on Zoom. And next month, speaking of the Supreme Court, we are planning a program on the Bittner case. So I want to wish everybody a wonderful rest of your day and take care. See you next time.
Thanks,
Bye.
Michele.
Thank you.
Bye.